director, and she's with us still this morning. Janet, the recent regulatory clampdown, of course, has caused a lot of problems for those with exposure to China. But do you see this as throwing up any kind of investment opportunities? We were just hearing there from Kathy Wood. She was saying they've gone back in and increased exposure to those companies that are doing things that the Chinese government likes. Others point to small technology companies in China and saying the regulatory changes mean more space for them. What kind of approach do you have with Chinese assets at this point?
Yes, so first of all, we are cautious on the Chinese assets at this point. We think the current situation is still very uncertain. The only certainty is that the Chinese government is definitely prioritizing social goals, having common prosperity amongst its population. And so we think that the regulatory clampdown and various other measures that aim to improve equality, they will persist in the future. I don't think this is going to be the end of all these measures. So I think that in the near term is still going to be very uncertain. So in terms of the opportunities, I mean, of course, if China does this right, this can boost the potential growth of the economy, because after all, if more people are lifted out of poverty, the average income of the population rises, there's more equality in the system, that should actually improve the long-term growth prospect and the quality of life of people. And that means more consumption. And that's exactly what the Chinese government wants to boost. And of course, if you have less of the dominant players, there's more competition, is a fairer society. Of course, some of the smaller companies could also rise in this environment. But the condition is that it has to be done right. It has to have the confidence of the market. So we're not clear whether this move by the Chinese government is actually doing it in the right step. So we just have to wait and see at the moment. And for now, I think investors are definitely demanding a very high risk premium for investing in Chinese assets, given the huge uncertainty, and will avoid adding for now.
A lot of European corporates, I'm sure, watching this push towards more equality and asking if this is done via growing the entire pie and therefore what that means for their opportunities. Let me ask you about emerging market assets more broadly then, Janet. We are focused, of course, on Jackson Hole at the end of this week, on the taper conversation. We might or might not get any clues. The Delta variant still very much at large in the US. We might not get clues then on when the taper comes, but we're listening out for them. What impacts will that have on global assets, do you think, if we are seeing the United States edge closer to the date of taper and then maybe edge closer to higher interest rates? Does that suck in assets from elsewhere in the world?
Yes, so our expectation for Jackson Hole is that Jay Powell will try to retain a dovish stance. I don't think he wants to spook the market, and it's pretty clear from the Fed minutes that they are going to act at some point. So I don't think there will be major surprises coming out, first of all. But if there is a more hawkish tone and U.S. yields were to go up, I think emerging markets will underperform developed economies. Because if we see from the last week's action, U.S. dollar has risen to a 9-month high, and that environment is historically negative for emerging markets. And in particular, we're also concerned about the COVID situation in emerging markets. They have a lower vaccination rate. They're slowly catching up, but it's still not satisfactory. And they often have quite draconian measures in terms of lockdown if the virus is not suppressed. But after all, we think that the EM, if there is a drawdown or pullback, won't be as bad as the previous episode when the dollar rises and bond yield rise, primarily because valuations have already come down quite dramatically, especially in China.
Janet, thanks so much for your time. Good to speak to you.